Hello guys, welcome to Smart Tech. So very quickly in this video, I'm going to be talking about how to use the KuCoin margin trading platform. So in this video, we're going to be learning everything about trading the margin under the KuCoin platform, right? Now I'm going to be differentiating spot trading and margin trading under the KuCoin platform. So for those of you who are actually new to KuCoin, KuCoin is actually one of the best exchange platform wherein you can buy, you can sell, you can trade, you can withdraw cryptocurrency of your choice. There's a lot, thousands of cryptocurrency trading pairs under this KuCoin platform, and the platform is very, very unique and it's user friendly. It means for those of you, for beginners, both intermediate traders and professional traders, you can use KuCoin platform. So you want to sign up on KuCoin, I'll be dropping the link under the description of this video. All you just need to do is to click on the link on the description of this video and sign up. I also will be dropping video guides that you will need to sign up. For those of you who are having problems signing up, those of you who are having problems verifying your KYC, making your first deposit, I'll be dropping the video link on the description of this video. All you just need to do is to go through it, you watch the video, follow the same method and guide that I did, the same steps, and it will just be as easy as ABC. So let's get started to the video proper about the KuCoin margin trading, telling you everything you need to know about trading the margin under the KuCoin platform. So like I said, there are several ways that a person can actually get started with trading cryptocurrency. So if you're maybe a very strong trader, an agile trader, you may have heard about concepts like shorting Bitcoin, margin trading, or trading with leverage. Of course, unlike what most new traders believe, crypto margin trading is not as complicated as it sounds. The crypto market is actually known for its high volatility caused by price fluctuations. However, the volatility makes it very, very difficult for traders to turn around quick profit because prices can get lower unexpectedly. Now, but through margin trading, the price fluctuation presents an ideal opportunity for traders to make a good profit online. So what is this margin trading, right? Now, the world of margin trading can be quite complicated for newcomers, right, to the trading world. Now, this concept the concept actually used to be common in markets with low volatility and slow activity, such as the forex market. But however, it has recently shifted into the cryptocurrency world. Now, the basic concept of crypto margin trading are easy to understand if you go straight to the leverage trading activities. In simple terms, a crypto margin trade enables a trader to borrow capital and increase to have an high buying power, right? They borrow capital to increase the high buying power. Now they can open a bigger position than they could with their actual account holding. Now a trader will get more exposures to various assets through margin trading by borrowing capital on the crypto exchange. This is difficult from a normal trading, that is the spot trading, where a trader deposits their capital to exchange for the trading activities. But in contrast to margin trading enables traders to increase the capital they can trade with beyond what they have. Now, when you're searching about margin trading, the term leverage often pops up, right? Leverage is the factor by which a trader will multiply their positions. For example, if a trader opens a trading position with 100x leverage, their exposure and gains will be multiplied by 100 times. Right, by 100 times. So margin trading looks very attractive on paper at first. Increasing profit potential by 10% looks very, very good. It's a great deal to any trader. But however, there is a downside. Using a crypto margin trading also increases your risks by close to the same amount. So the higher the leverage, the higher the profit and the higher the risks. So let me give you an example of a typical example of margin trading. Let's assume a user invests $25 on crypto exchange, and the leverage is like 4-1. The exchange will allow him to borrow about 75% extra. So this happens automatically. It will not seem as if it's borrowing. So we have a total of like $100 to make his trade. Now, when Bob agrees to this, it means that he will have to pay back $75 lent to him, plus any other fees, regardless of him making profit or losing in the process. But exchanges such as KuCoin have a mechanism in place that can guarantee that Bob's will replace his money he borrowed. Now the exchange, in this exchange we call it calling. Calling is margin trade. Whenever the asset price starts to decline to a point where Bob starts losing the money lent to him. So if the user wants to avoid a margin call, he can invest more of his money into his trading position. I hope you understand what I'm saying. So what are the benefits of actually trading a margin on KuCoin platform? Now, margin trading carries a higher level of risks, right? than a normal spot trading, especially when it comes to cryptocurrency. Now, crypto markets are highly volatile, which means that margin traders need to be very, very careful when taking their positions. Now, for this reason, margin trading is not recommended to new users because it requires advanced hedging and risk management strategies. So, if you are a new user on this platform, don't just jump into the margin trading without getting experience, without being educated. You need to be educated, you need to learn before you can earn. But however, this does not mean that margin trading does not have its benefits. Through this strategy, a trader can open a position that's exposing it to more profit than they will normally gain with their ordinary assets. As mentioned earlier, a successful trading position at 100 leverage will give you 100 times profits than what you would have earned in a normal spot trading. Now, what are the risks? What are the risks under the margin trading platform? Now, margin trading is highly it's a risky venture. Let me not lie. There are several risks that needs to be considered before taking a position. The first one is that crypto market is largely unregulated in comparison to traditional markets. Now, this exposes the market to price manipulations, especially in crypto margin trading. Now, market movers are traders who can influence the market because of their large capital holdings. They can take a position that can affect margin trade. But this is what is actually happening right now in the crypto market. Now, let me give you some few tips before I round up. Let me give you from some few tips for managing the risks. Right, some tips that traders use to reduce risks of to reduce the level of risks associated with market trading. Some of them include that traders should start with small trading positions. Yes, traders should start with small trading positions with a lower leverage. They can increase their trading size with time as they understand the market and the position itself. So it is advisable to start with a demo trading. A demo trade creates like a fake trading ecosystem that will allow new traders to like join and gain insight into trading activities and gain new trading styles. Just like the forex market, if you're downloading any forex app, you'll see they'll give you a demo account for you with a lot of funds that you can use to practice to get perfect before using your main funds. Now, traders can minimize their risks by spreading their positions. Now, having multiple profit taking levels will allow them to grow their chances in making profits, will allow you to grow. Okay. Now, evaluating interest and fees also is there. Now, always look out for external factor that might influence. Do your fundamental analysis very well. Look for external factor that might influence the crypto market on a particular pair before going ahead to enter that trade. So, very quickly right now, I will just go through the KuCoin application to show you just explain some of the basics things under the KuCoin margin trading, how to get started, how to open it on the application, and just some of the features it has. So I'll be going through to my screen to share that with you. Stay tuned, guys. Let's get to my screen. So, guys, there are actually several ways that you can access the margin trading platform under the KuCoin application. What you can see here is my KuCoin application, right? So there's several ways you can access it, but one of the best ways is just you can see this margin trading on this dashboard right here. Just right at the dashboard, you just click on margin trading. So I'm just going to explain all the features you can see here on margin. Now, under margin trading, there are actually two forms of margin trading. We have the cross margin and the isolated margin, right? I did a video in the past explaining what the difference between cross margin and isolated margin trading. So I'll be dropping the link so you just go through it. Okay, and now the next thing you can see here is the trading pair. Right here you can see the trading pairs BTC/USDT. Once you tap on this, you'll be able to select whatever trading pairs you want. You can see there are thousands or there are hundreds of trading pairs under the KuCoin margin platform. So you can just select your pair. Whatever one you start is going to be under the favorite menu. You can see USDT, BTC, Ethereum, whatever one you select is going to be there. So you can see here, what you can see here are the sell price, those who are shorting, and what you see here are the long price, those who are longing. So you can see buy or sell. You can either buy is long, or you can either sell. So whatever you want to choose, you just go for it. Now what you see here is the chart. You can also tap on this to either view the chart. You can see the upright 1 minute ago, 1 week, 1 day ago. For you to study the market, you can go back. If you want to see the chart and also see this platform, just tap on this icon. It's going to have the screen. You're going to be able to read the chart while you can also trade. So this is just how it works. This is just the cross margin, the margin platform under Binance. In my next video, I'll be briefly explaining everything, how you can make a trade, how you can start. I'm just giving you There's also an auto. You can see here there's auto, borrow, and manual. Select on manual. You can auto borrow. You can select auto borrow. Here you can see the leverage. The leverage available is from 1x to 5x leverage available right here on BTC's USDTs. Other trading pairs leverage can differ. So that's just once you enter an order, it's going to be here. It's going to be on open orders, then it's going to be on position. Once you stop, all the orders here are going to show here. So my next video, I'm going to be briefly explaining how you can enter a trade. You can see the market variations, you can see the market fluctuation, the price goes up and down. That's how volatile the market is. So thank you very much, guys. Make sure you like and subscribe to my channel.